Hi everyone, welcome to my channel. In this video, I will be breaking down a level 2 strategy with the help of an actual example of ZM from 15th of September 2020. I personally took this trade, I lost money on it, but I think it's a very good example to understand how order stacking can help you decide if a breakout will be strong or weak. Similar to my last video, I will try to explain the strategy first before we jump onto the actual example. And the actual example is of ZM and the screenshot is also of ZM. So it will make it a bit easier for you guys to understand what's happening on the actual example. In this screenshot of ZM, the ask is at 411.30. The bid is at 410.55. Now consider a scenario that you as a trader, you are thinking of taking long if the stock breaks 411, if the bids jump above 411, or maybe it breaks 412. But the whole point of the screenshot is that if a critical level breaks or it's going to break, you want the big bids to be stepping up in price. I'm talking about big bids again. I'm not talking about 100, 200 shares. I'm talking about big numbers. And you want the big sellers to be asking more for that particular stock. What does that mean is that the buyers are willing to pay more. The big buyers are willing to pay more for that particular stock. And the big sellers are asking more for that stock. So this kind of creates an order flow that the buyers are willing to pay more, the sellers are asking more. So that is a perfect situation. In the screenshot, there's a big bid at 410.00. Now to understand the strategy, the first thing is that you have to look at a recording. You can't understand the strategy with the help of a screenshot because you don't know what happened after 10 seconds. So that big buyer might have disappeared after 10 seconds. So the buyer gave up because the buyer saw that the stock is going up and it's not coming to 410. But at this point, the big buyer is acting cheap. Even though that the stock is at 411 or 411.30, the last price is at 410.93. Those 4,000 shares, the big set of buyers, they are acting cheap and they are not increasing their price. So if you are thinking of taking long, you don't want the buyers to act cheap. You want the buyers to step up their price and you want the sellers to be asking more for that particular stock. Let's look at the bigger picture first and why I decided to take the trade that I took on ZM. ZM has been in an uptrend since the start of this year because the working from home thing and whatever, it's been like ZM has been doing great. And now on 1st of September after the earnings, it made this low of the day around 410.68. And that's what I know, that 410 is a strong level on ZM. On 2nd of September as well, the low of the day was 410 to be precise, exactly 410. And then on 15th of September, it was breaking that 410 level. And I believe the pre-market high was around 412. So my plan was if it breaks 412 level, I will enter long, I will buy calls. That's what my plan was. I lost $500 on 5 contracts because I got faked out and I could see that on the level 2 box. But I know that if I would have held it maybe 30 seconds longer, I would have lost more than $1,000 because people who have traded ZM, they know what I'm talking about because the premiums drop like crazy if you are faked out. Thankfully, I only lost $500 and I ended that day green because I saw something on the level 2 box, which we will be discussing in the recording. This is the recording of ZM from 15th of September 2020. This recording is only a minute long, so try to be with me, understand as much as you can. I will try to make it as simple as I can. In the screenshot, we saw that there's a big bid at 410, that is 4,000 shares. So this is the level I have to keep in mind when I'm thinking of taking long. So my plan, if it breaks the pre-market high and if it breaks the 412, that would be my entry. But because I know that the reversals in the first 5-10 minutes are very strong, the spread are also huge. If you're trading option, the spread is also very huge. I'm not willing to take that risk, so I will get out if the trade idea doesn't work in my favor. I'll play this recording now and let's see when it breaks the 412 what happens on the order flow. It broke, it's kind of breaking the 412 level. The ask gave up. Okay, so this was my entry point. As soon as I saw the ask breaking out, this was my entry point. Now this is still working against me. The big bid at 410, it's working against me. But before I entered, I knew if it doesn't hold above 412, I'm exiting. I entered, so I was in the money. I was maybe $100 in the profit, but I'm not taking those $100 because my profit target is 415, and I know if ZM moves, it can move $2-3 in my favor. The ask is at 413. There's a big bid at 412.36, so this is also working against me at this point. So the ask stepped up to 413.49 at this point. The big bid is still holding 412.36, and there's another big bid at 410, the same big bid. I hate those buyers because these buyers are acting cheap. Even though the sellers are trying to ask more, the buyers are not willing to pay more. So that is what is happening at this point. And I hate these buyers because I'm already in the trade and they are not willing to pay more. But the only thing working in my favor at this point is that there's a big ask at 415 as well. I know that if 413 breaks, we can see 415 in the next maybe 1 minute. That's why I held this trade for this candle. Now some orders went through at 412.36. That bid got taken out by the sellers. So the sellers, it's under 412.36 now. This is very concerning to me because early in the morning, if I see a reversal, if I'm in a losing trade, I'm gonna lose big. But I'm gonna give it this candle and see how it closes. If it closes above 412 or under 412. Now this candle closed and this was my exit point. I exited within the first 2 seconds of the second candle. So I exited as soon as the ask failed to hold above 412. This was my exit point because I know there was a big bid at 412.36. It made this huge wick on the first candle and the next level is 410. So am I willing to take that risk to for the stock to go against me $2? And I know early in the morning the spread, if you're trading option, the spreads are insane and I'm gonna lose a lot more. Am I willing to dig myself a big hole in the first 2 minutes of market open? So that's why I don't do it. If I see that the trade is not working in my favor, I exit. And that's how level 2 helps you to trade within the first 5-10 minutes. I will post a screenshot of my entry and exits right up top on the left of the screen. But if you see, I lost $500 on 5 contracts, around $500. That is $515 including commissions. But if I would have held it, even my entry was here 412, my exit was here at the break of the 412 again on the downside. But if I would have held it even 30 more seconds, I would have lost more than $1,000. That's why you need to understand reading the tape is very, very critical if you are trading the first 5-10 minutes. So this is a screenshot of ZM at around 955. This was our entry. This was our exit. It never broke that level. Now, if you're trading the first 5, 10, 15 minutes of market open, you need to understand that you don't have a market direction. The first thing is that there's no direction on SPY. There's no direction on the stock you are trading. The second thing is that if you're trading options, the spreads are insane because you're gonna lose a lot more than you expect to. The third thing is that you can't be hopeful in the first 5, 10, 15 minutes. You need to cut your losers quick because if you hold on to your losers in the first 15 minutes, then you're just going to play catch up for the rest of the day just to make it green, and it's not worth it in my opinion. Personally for me, I had a rule to not to trade the first 15 minutes when I started out, and there's a reason behind it because my max loss was only $50 when I started out. I was trading shares at that time. So I used to reach my max loss within the first 30 minutes, right? So it wasn't worth it for me. That's why I had a rule to not to trade the first 15 minutes. And these days I quite frequently trade the first 15 minutes, and many people ask me on my Instagram because I post screenshots of my trade on my Instagram, so you can follow me there to follow my trading journey. But they ask me that how do you trade the first 15 minutes? And the answer is that you should not if you're just starting out, but you should focus on reading the tape, the first thing. The second thing is that you need to learn to cut your losers quick in the first 5, 10, 15 minutes. These are the top 2 suggestions I would give you if you trade the first 15 minutes of market open. Give this video a thumbs up if you like this video and subscribe to my channel because I will be posting a lot more trading content on this channel quite frequently. You can follow me on Instagram because I post a lot of my trade screenshots, my monthly, early PNL and all the good stuff on Instagram. And if you have any questions, put a comment down below. I will get back to you as soon as I can. I will see you in the next video.